Hello, hi, and welcome to the market update from 4th to 8th of November 2024. So let's start with the world market. There were a lot of rate cuts that happened in the last week. The first rate cut was from the US Fed Reserve, which announced in its seventh policy decision that to slash the benchmark interest rate by 25 basis points. Now the interest rates lies in the range of 4.5 to 4.75%. Sweden also had cut its rate by 0.5% to land at 2.75%. Bank of England also made interest rate cuts by 25 basis point to come to 4.75%. Pakistan's central bank also had cut their rates by 250 points, which now comes to the landing rate of 15% after its October inflation moved to 7.2%. It was a very surprise move that Pakistan central bank made this large cut. Of news from China, there was a proposal that as a part of the severance package that they are doing on, that they are going to increase local government debt limit by $839 billion. So let's move to the US 10-year Treasury bond yield. US 10-year Treasury bond yields, after being elevated to a level of touching close to 4.5%, and once the rate cuts was announced, it lowered down to 4.3% for the week. If we move to the oil prices, the Brent oil prices traded close to $73.9 a barrel, which was up by 1.32% from the last week. If we move the gold prices, we look at the 24 karat gold prices is currently at 77,292 per 10 gram, which is down by 1.88%, which is corrected from its earlier peak from the last week. If you look at the US dollar index, the US dollar index has again risen up. It has gone to closed at 104.325%. Let's see how the markets were overall impacted with all in the last week. We saw that the US market gave up a thumbs up to the Trump being elected as their president, and we saw 5%, close to 5% up move in the markets. Whereas the European markets were still in negative, they were down by close to 2 to 3%. In the Asian markets, the Asian market GIFT Nifty was down by 4% last week, whereas Japanese market was also in the red. The other markets, the Hang Seng was also negative. The Chinese market was up by 7%. We will now move to the FII and DII activity for the week. FIIs for this week again continued with their selling activity and sold close to 19,637 crores worth of Indian equity, and DIS again bought close to 14,391 crore worth of equity. So we have started this month again on a negative note from the FII side. For the month, the same figure applies as it was the first week. If we look at now we move to the weekly performance of the market. The weekly if we look at the weekly performance of the market, the Sensex was down by 0.3%, Nifty 50 was down by 0.6%, whereas the Nifty Bank was down by 0.2%, Nifty Mid Cap 100 was down by 0.2%. There was a large correction seen in the small cap, which is down by 1.7%. Now we look at how the valuations were affected. The Nifty 50 trailing PE reached a valuation of 22.3, which is just on a 2 years high and below the 5 years average. The Nifty mid cap 150 trailing PE is at reached a point of 42.9, near 2 years and above a 5 years high. Nifty small cap 100 trailing PE is at 34.8, close to 2 years high and above 5 years average. If we look at the Buffet indicator shows that the markets are still modestly overvalued with a range of 105.65%. How the Indian bonds were reacted to the last week? The Indian 10-year government bond yields moved a bit to a lower side, close to 6.885% of yield. The yield curves in the short, mid, and long are still flattish. So that was all from my side. Hope you liked the video. Do share, subscribe to our channel to get the weekly updates on the markets.